Hello, this is Victor T. Connor of Connor Financial Group with my market outlook for 2018. 2017 surprised many investors, and I believe 2018 will continue to surprise many. There are a number of reasons I believe the market advance will continue, so let's get to the point. The American economy is firing on all cylinders. And here's why. Key point number one, economic indicators across the board are positive. Gross domestic product has now doubled over the last 2 quarters to over 3.2%. That is twice the GDP we've had for the last 8 years. Additionally, a number of economists are forecasting an over 4% GDP going forward. GDP growth has already translated into earnings growth. Over 75% of companies reporting earnings have exceeded expectations. Unemployment is now just over 4%, also the best we've had in the previous 10 years. Manufacturing is returning to America in strength. The most striking example is the automobile industry. Toyota and Mazda recently announced a $1.6 billion plant in Alabama, and Volvo is expanding its $1 billion plant in South Carolina. Today, BMW, Daimler, Honda, Mazda, Toyota, Volvo all manufacture cars in the United States for domestic sales and for exporting. Housing starts are up and confidence is up with the second highest reading since July of 2005. Energy costs are moderate, contained, and the energy supply is growing faster than demand. Consumer confidence in November reached a 17-year high, and ultimately, it is consumer confidence that drives the economy. Key point number two, tax reform. We've now passed the first major tax reform in over 30 years. The base rate has declined from 35% to 21%. Previously, a dollar of earnings after taxes netted companies 65 cents. Today, that same $1 of earnings nets 79 cents. That's an immediate 22% increase in earnings at the stroke of a pen. The lower tax rate has been felt all across America. Companies from AT&T to Walmart have passed out substantial bonuses, implemented pay raises, increased retirement plan benefits, increased U.S. capital spending, and increased charitable contributions. Publicly announced bonuses have now exceeded billions of dollars. With the new tax reform, according to the Department of Labor, 90% of Americans will see an increase in their pay beginning in March. An iconic example of Tax Reform Act is Apple's news. Every employee is receiving $2,500 of Apple stock. Apple is bringing in $250 billion in offshore profits and paying $38 billion in taxes. $30 billion in U.S. capital spending over the next 5 years, opening a U.S. manufacturing plant and creating over 20,000 jobs. The CEO credits tax reform. Key point number three, for every new regulation in place, 22 have been repealed. The regulatory relief allows businesses to concentrate on creating new and improved products rather than filling out government reports. In addition to easing the burden on corporations, the backbone of our economy, small businesses, can concentrate on bringing better goods and services to the market instead of fighting cumbersome overregulation. Regulations are needed, but overregulation strangles too many from reaching their true potential. Key point number four, interest rates. The accommodative stance of the Federal Reserve Board continues in place, and the new Federal Reserve Board chair has publicly stated he intends to continue with Janet Yellen's policies. Interest rates will move up slowly and deliberately. When you add up these key points, economic conditions, tax reform, regulatory reform, and interest rate policy, I believe the American economy will continue to fire on all cylinders and the market will reflect those conditions. If this set of conditions continues, If it can spark a virtuous cycle in which people can make money, the move out of cash that pays practically nothing into the investment markets can be huge. Finally, a pro business United States with its rule of law, political stability, property rights protection, and a favorable tax rates offer a uniquely attractive environment for those who make money and have money. If you'd like to discuss how you could benefit from the 2018 market outlook, please give me a call at 561-713-1333. And please visit us on Facebook and LinkedIn. I'm Victor T. Connor from the Connor Financial Group. Thank you for spending this time with us today. These are the sole opinions of Victor T. Connor of the Connor Financial Group, and not necessarily those of Raymond James Financial Services or Raymond James and Associates. The information contained in this report does not purport to be a complete description of the securities, markets, or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision. It does not constitute a recommendation. Investing involves risk, and past performance is not a guarantee of future performance. Thank you.